Welcome to Trading Lounge and the Australian report for the 2nd of June. Today we'll be looking at the ASX. We'll be looking at a few stocks as well, pretty much the stocks we looked at yesterday. A little bit of an update on those. This particular pattern that we're looking at here, as you know, we've been looking at it in a few different ways. This particular move up through here as wave A, and then a corrective move here for B, and going up for C here into the 50 and the 61.8% mark around the 6,000, and we're on track for that. It is possible to look at this as more of an impulse wave to the upside in terms of a wave 1 here and a wave 2 here. So we may even look at that today. The other point here is that we can look at this particular pattern down here in a variety of ways. We can look at it in terms of an A and a B and a C and a D and an E wave here for wave B, and then looking for 5 waves up here in terms of 1 and 2 and 3 and 4 and 5 here and completing there. It's also possible to look at this top as already being in place here in terms of 1 and 2 and 3 and 4 and 5 and a top in place for that. I want to have a revisit that today. And it's also possible to look at this in a different way as well, in 3 ways, but having this as wave 1 here and 2 here, and then going up for wave 3 here. So where wave 3 is up here, we'll be looking for 5 waves in wave 3 here. So 1 and 2 and 3 and 4 and 5 up here for wave 3. So we're going to look at that again. Well, we haven't looked at that yet, but I did mention it yesterday. So today we'll take a look at that. So there's a few things that we'll be looking at in this space today, but let's just move into the intraday and start checking it out. So this was the case. This particular structure here was that we had wave A here and an A and a B and a C wave here for wave B, and I kind of like this in a way because of this, you know, this move down through here being in 5 waves here, so it makes it a nice C wave here, you know, where I was looking at it in terms of the triangle, which we'll also look at again today through here as an A, B, C, D, E. I mean, this wave's okay, this wave's okay for that can be counted in 5 or 3. This one is in 5. This one can be counted in 3, and this one here doesn't really matter, or does actually. Yeah, it didn't. It's not clear. So, but this is the clear one here. So I really kind of like this as being the wave B here, or even a larger wave 2. So this wave 1 here with an A and a B and a C for wave 2 here. But in this case here, we've got a top in place here. But this particular move down through here, we can count as a corrective wave on the, because this market here is a bit of a mix between the cash market and the futures market, and it's a CFD product. So sometimes it can vary from the cash or the futures in a way. So we just need to be a little bit mindful of that and be a little bit more careful and diligent with that. It's at 5,800. So in regards to the trading levels, which are 1, 2, 3, 5 and 8, the Fibonacci numbers, and we can see that we've had, if we get a good support on 5, well, then we'll move to 8. We know 8's a profit-taking number, so we're seeing that unfold through here, and we can look for a top in place here, or we can look at that there in as wave 4 here, and this is where the triangle pattern comes in here with the A, B, C, D, and E. There's as a case for that, the weak spot is this particular move here, as I mentioned before, but have this as 1 and 2 and 3 and 4 here, and 5 to the upside here. Now, the other pattern that I wanted to look at, which I mentioned yesterday, and I'd like to have a look at that today as well, and bring that into the fold as well, and that is like this here. So, just a bit bigger of a bullish market. So in this case, we would look for wave 1 here, an A and a B and a C for wave 2, and then wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 coming into play here, which will give us wave 3, then back for wave 4. I should bring that down a little bit through here, probably bring that over about there somewhere here. Little ABC here for wave 4, and then up for wave 5 here. So and then would have wave 4 here, and then, you know, moving up. And so a case for a bigger move here. And the reason I like this for is based really on, you know, if I take this top here and this across to this point here, that's what we would call an accumulation process, and the trend is the distribution process. This is Richard Wyckoff's work. He was around sort of the 1890s to the 1930s or something, in there with Gann and those guys. Richard Wyckoff was the first one to get the understanding or the relationship between price and volume, unit for unit. Definitely worth a read, that gentleman. So normally what he would say would be, we'd take the distance of this sideways here, and then we could just stand it on its head going up that way, and that would be squaring time and price, which also Gann got into as well, but Richard was the one that pulled that out of the hat first. So there is a good case for this, and as always, what we try to do is we just try to follow the evidence, and sometimes the evidence is not clear, so then we need to be cautious, and we need to move into tactics to compensate for that weakness in my ability to analyze something. So anyway, today we just want to really drill into this little section here to try to understand that a little bit. So we're going to go into, maybe I'll go to the hourly chart, right? Okay, so a little bit messy, so I haven't updated this, but we're looking for wave 1 here, and then wave 2 to come into play here. That's what we're looking for there. I'm going to go to the 15-minute chart now. If that's going to be the case, we'll see 3, 4, and 5 come up into this space here. This wave C can be a 3 as well, doesn't really matter. We're just really interested in this structure here for terms of trading. Now, yesterday we were also looking at this down here as an A wave, a B wave, and then 1 and 2 and 3 and 4 and 5 here. When the market opened yesterday, I think we were up here anyway, but it had one drop down here. And I find that really annoying, because if I go to the 15-minute chart here, we're sort of drilling into the situation. We were fine up to this point here, because I could count an A and a B and 1 and 2 and 1, 2, 3, 4, 5, for 4, for 3, for 4, and down for 5 to this point here. When the market opened here, we had shorts in the market, and we were looking to put our stop here on the open. The market dropped down, so hopefully you may have exited there, and the idea was to trade long above this, to exit at this and trade long at that point there. And you may already have a position that's sitting over here as well for that. So we've turned from being short to being long. So we've done all the right things. But what really sort of haunts me now is that, the market was up there and it dropped down and made a new little low here. So what that does, that really, technically it makes this down here as 1 and 2 here and 3 here and 4 here, and then wave 5 here. I know wave 5 is short, but it's there. So I'm left sort of scratching my head a little bit on that. And if I look at the if I look at the cash market that has moved down here, the physical market, the XJO, this is what it looks like on a 1-minute chart. 1, 2, 3, 4, and 5. So, maybe I could look at it as an A wave and a B wave and a C wave, but I don't have any overlapping wave structures here between wave 1 and wave 4 here. So we've got this 5-wave structure here. That means that the market will pull back up to 61.8%, 62%, just as a guide stick, and then drop again from that point. So we would have an A wave down here, B wave back up, and then a C wave coming down again. So what we need to do now is we need to look after our long positions. So what I can see here is that I can count this up here as 1 and 2 and 3 and 4 and 5. So if I can just borrow that for a moment, I'll just count that as wave A here. And that also too, that can be wave 1 here as well, as I mentioned on the hourly chart. So we just got to see which way the wind blows on this. We just need to move in and work things out a little bit. So we've got a B wave here. Yep. And we've got a C wave here probably. I mean, it's only small as well. The other point here is that we can take this top here, roughly speaking, this low here. That's the 61.8%. We're in at the 72% here. Not that that means much to anybody except me, I guess, but it's just my own thing. But so the only possibility, so we're at that space where we can drop back from that point. So now we're sort of drilling in and we need to come up with sort of solutions, because looking at the physical market and this extra low here, you know, we could have 5 waves in all of this here. And it might mean that this wave 4 here is just going to get a little bit more complicated over here. Or it could mean that we have a top in on one of those counts that we have. So it's just a little bit dangerous. So we definitely need to bring the stop up into play. So this situation here, if this market was going to be bullish, let's just say that this is wave 1 up here and this is wave 2 here. Well, then this would be wave 1 here, and then we'll be back for wave 2 here. I'm not saying that that's the case, but that's what it can be. So we could look at this as 1 and 2 here, then 1, 2, 3, 4, 5 here. So there's probably a little bit more to go in here, maybe another little move up or something. But then the market can come back for this 1 and 2 here. So let's just go to the extent of bringing it back down into 5, 8 here. So wherever that top is there, you could grab this here and this here and look at that as the 61.8%. You have to adjust that, of course, if the market makes a new little high there. The 5 waves, in fact, the 5 waves are probably already in at there, so I'll leave it at that. So we could draw that in here at the 61.8%, and then we could say to ourselves, well, if that market drops, if that 5,800 becomes the retested resistance, then we've got a problem on the bullish side. So we could put the stop here. So that's what we're going to do. We're going to put the stop right there, and just like a point below. Always find that number there. So that's ending in a 6, so that's fine. So because if it's not a 6, then you have to go under the 5, and you wouldn't want to put it at 4. If it hits 5, it might spike at 4, so then you have to go down to 2 or 3 at that point. So 86 is good, because if I was dealing with if I go up there, so I'm protected by, like, you know, 8's a strong number, so I'm protected by 8, but I don't want to put it at 7 because I might get a spike. If there's the order's going to be sitting at 8 and it may spike down to 7. I might get away with 7, but 6 would give me a very clear breach. So my trades to the long side pretty much always ending in a 6 or a 2, and that's on stocks as well. It might be $20 and 22 cents or 26 cents, you know, that kind of thing. You'll have better luck using those numbers, and it will keep you away from whole numbers as well. So I can just remove that little bit there. We might not make a new little high there. So the thing is, we could come down to here somewhere and then go up, and everything's rosy and our stop is here, and so on and so on. But if this becomes the retested resistance, the 5, 8 here, then we've got ourselves a problem. Now, what would drag it down apart from the S&P 500, which is, let's just see how that's finished up for the day. So it's pretty flat at 0.3 or 0.4%. I'll just check the NASI because that's the one that's been leading us to the upside. That's up a good 0.5% and will probably go higher as well. So there is good news there. And also too, on the positive side of things, before I look at the negative side, this is the Australian dollar here. So with the Australian dollar, we're at 65 cents, which is a medium level. And I can see here that we've still got further to drift in this particular trend here to the upside here. So that's a positive for, because this will correlate with the S&P 500, and the S&P 500 will correlate with, well, our market's a bit of the ASX200, a bit of a lead, dog on a lead. So I can just hold on to the tail of that. But what our problem is the iron ore market. So crude is coming close to a top, so be mindful of that. So I'm going to look at iron ore because we looked at it yesterday. Now, I haven't pulled this apart a lot, but from the lows here, I was looking at 1 and 2 and 3 and 4 and 5. As you know, we've been talking about this coming up to here and here and here. So we could have a top in for iron ore now. So let me just go in and check on that. This is our 1 and 2 and 3 and 4 here and 5 here. Is that finished? Let me just... That would be wave 1 in there at least. So it's down at 50%, so it's probably finished. So 1, 2, 3, 4 and 5, the third wave, fourth wave and fifth wave. Just go into the tick chart and just drag that down a bit further. It's not going to give me any more data, so I can't count that, but I can count this top here. So with the top here, we can go probably, well, what I can see here is I can see the third wave here. So that's what I normally do, just try to find something that pops out to me. So I can see from here we've got 1 and 2 and 3 and 4 and 5 here. And this is a nice fourth wave here with an A and a B and a C wave here. So this will be wave 1 and 2's in here somewhere. It could be even wave 1 to this point, but it's there somewhere. I need to work on that. But this would be 1 and 2 here, and yes. So we're close. We've got wave 1 and 2 and probably 3 and 1, 2, 3, 4, 5. There could be another low to come in place. The number that we'd be looking for would be 72 here, so we'll get a nice bounce off that. So the thing here is that we've got 5 waves down here now, so that means that we've got a top in place. So we're going to get, we may be saved here. We'll get a bounce off here coming back up, say 50%, and then we'll come down in an A wave, a B wave or C wave. This could also be wave 1 here and 2 here and 3 here. I need to do more work on iron ore, but that brings the top in there, and that would also line up too with our BHP situation. So with BHP here, we were looking at starters here. We can look at this in terms of being conservative as wave A, and then an A, B, C here, same pattern as the ASX200. We've got you can see that we've got 5 waves here. So that's really a clear pattern for the ASX200 because that's been pulled up by this market. Not BHP, but the resources get their commissions, clipping the ticket. So from here, as an A and a B and a C wave, looking at this conservatively, yes, it could be a wave 3 here and move higher and all the rest of it, but steady as she goes, Captain. So we're looking at 1 and 2 here and 3 and 4 here, and then going up for 5 here. So I think we're pretty much, it's in there somewhere. When we look at the tick chart here, it's just a little bit messy. But we've got 1 and 2 and 3 and 4 here. And look, to be honest, this is messy here. I can see parts of it, but I can't count all of it. And there can be another little move, 1, 2, 3. There can be another move to the upside here because we've got an A, B, C here. So this would be 1 and 2 and 3 and 4 and 5. So we can move up here a little bit further, and crude will help take that up there a little bit. And also copper as well. Copper's moving up, so that will take BHP up. But you really need to start bringing your stop up for this now. So if I just go back to, need to bring it up to, say, under this low here somewhere, just not on 30, that's right on, what's that number on there? Let me just check that out. That's 30, 35, 40. So we can bring it down to 36. Anyway, 36. So we'll go back to the daily chart here. So that stop here now can be moved up to 35. We're just going to try and suck as much as we can out of it, you know, because of what's happening. 35. Anyway, you know what to do. 36. We're going to get in there, really in there close to take as much as we can for that. And we also need to look at, we looked at Fortescue yesterday as well. There's only a short-term trade for Fortescue, so FMG. So we'll just go in and have a little look at that. So yesterday we were looking at this here. We understood that this was 1 and 2 and 3 and 4 here with an ABC here. So we could go long here, and we're going to go up to $15 here. I don't have this on the other chart yet or set up or anything, but yeah. So you don't have to get out at $15, you know, like $14.98's good. You don't really want to see any weakness in this. You maybe take take I don't know. Everybody's a little bit different. I mean, if it was, yeah, I don't know. I can't see it intraday, so I can't see it. So anyway, think about locking in some profits for this here. And I could prove wrong, and it could shoot up straight through it a bit and whatever, you know, but near enough is good enough, as we say in Australia. So just lock that in. It was just a short little trade. So, but we've got these, we'll look at this more. We'll look at the bigger picture for all of this a little bit more, but this is the same ABC pattern that we've got for the other markets as well, slightly different, but it's there. So definitely the ASX is moved around by the resources. So what we have to work out is that, is this an A and a B and a C wave here, the same as the ASX200, or do we have wave 1 and 2 and we're going up for wave 3 here? It's got really nice form here, and it looks powerful, doesn't it? So it's kind of got that, you know, all the bars are more spread out, where here it's all, you know, all like sort of, you know, what's up sort of thing. And yeah, so we may have that third wave here. So, but either way, what we have to do is, once this tops out here, say it goes to 1550 or whatever, once it tops out, if it's going to be a wave 4, we're going to see an ABC correction. We're going to see another one of these. This one was 1, 2, 3, 4, 5, 6, 7 days. So we'll probably see one for twice that, because it'll be bigger. So we'll see one for like 2 weeks, and then we could go long again from that. If that's the case, we need to work out if it's corrective or not. Okay, I've yacked on long enough. Thanks for tuning in. Cheers.